is that to blanket statement call something bad or good
Yep.
is not very intelligent.
Yep.
What is intelligent is to say, what result am I looking to get from this particular tool, and then evaluate that tool based off the result that I'm looking to get and the clarity that I've gained from understanding that thing that I'm after.
This is Better Wealth with Caleb Williams. Hey everyone, welcome back to another episode from the Frontlines with Jereme, and we are in the Smith Edition case study series where we're going through real life people, obviously changing their name and showing them how they've gotten results so that this can be an inspiration and it can be something very insightful. And so velocity banking, helocs have been floating around a lot on the internet, and we actually have clients that have used it properly. And you always have to be careful when you talk about certain things like this, because I'm not giving any blanket advice. Talk to a professional. But we have a pretty cool and exciting case study to just talk about how someone that is in our ecosystem has used this in a powerful way and is better off for having integrated better wealth with what they're currently doing.
Absolutely. So the way that I want to start this off, Caleb, is to talk about how important it is to, be able to model something as accurately as you can. So for instance, Mr. and Mrs. Smith in this case came to me, and our initial consultation, they had they're a one salary family. By the time we met a second time, they figured out that they were going to get a raise. And I said, well, when is that going to happen? What we were able to do with the income tool is give them one income for a certain period of time and then morph that into the next income for the next period of time. So we were able to model that raise and set their consumption number without accounting for the raise, right? Meaning that they made more money, but they didn't necessarily spend more money.
Mm-hmm.
And Mrs. Smith in this case, I refer to her as the CFO for this family. She is super into the details and the numbers. And every time we meet together, she's got this gigantic book. I introduced her to this funny thing called Google Sheets.
Oh, no.
And now, so note-taking is becoming more virtual.
I love
and
it.
We don't lose pages. But long story short here.
This Mrs. Smith is going to have a seat at Better Wealth someday. So stay tuned.
I would love for that to be the case, because she is constantly asking me for resources, for books. How do I learn this? She developed her own question and answer sheet if you're looking at getting a HELOC.
That's cool.
Or if you're looking to use a HELOC as part of a velocity banking strategy in order to pay off the house or pay down debt or what have you. I personally was very apprehensive, because I have seen a number of cases and case studies where people have not used velocity banking to great effect, and they've put themselves in a very negative risk management situation.
Right. And I'm going to define velocity banking. Velocity banking is using a home equity line. So it's like if you have a mortgage, you can then, refinance it, but have a home equity, which is essentially this revolving, balance. And what would happen is a lot of times people would use their home equity, pay down their house, and then pay all their whole paycheck into that.
Yep.
And so they show you how you can save money on interest and all these things. And one of the two big questions that I have is like, why are you putting all your time and energy into paying off a mortgage? So that's what question number one is. I think a lot of times the goal is to be debt free, and I don't necessarily think there's a lot of intentionality behind that. But then number two is who has control. I mean, there's no such thing as 100% guarantee, but putting your whole financial life in a HELOC where a bank controls and that could essentially change is a little bit frightening. So that's what I want to give you, like the pros and cons is, a lot of people are, I think, rolling the dice doing this, but then there's all other people that are doing it right.
So that being said, I want to call it a principle, but one of the things that we say here at Better Wealth, and this is we, not I, is that to blanket statement call something bad or good is not very intelligent.
Yep.
What is intelligent is to say, what result am I looking to get from this particular tool, and then evaluate that tool based off the result that I'm looking to get and the clarity that I've gained from understanding that thing that I'm after.
That's right.
So what result? So for this Smith family, the result that they were able to achieve by using the first position HELOC, putting the money in, and then distributing out from that, was actually pretty dramatic. They were able to pay down some higher interest debt with that, free up more cash flow on a monthly basis. And now they're in a position where they're able to save very, very, very well.
So,
as opposed to
they
when
use velocity banking instead of paying off their mortgage. They actually paid off high interest debt.
Yeah, so they started off, they did a first position HELOC. So all of the money that they make goes into the HELOC. And then from there, and again, not all HELOCs are created the same. Mrs. Smith went out and sought what it is that she wanted. She needed to make sure that she could distribute from it as many times a month as she wanted to. And with that intact and with the correct product, she then went and started putting everything in and distributing out of in order to pay off high interest debt. Once that was done, now we start developing savings.
Got it.
All the while increasing cash flow along the way. And one of the things that the model will highlight is that cash flow is king.
Yep.
A large amount of money is in very few cases going to trump cash flow over a lifetime. Okay.
Well said.
So that being said, very proud of Mrs. Smith because I forced her to communicate to me how she was using this, and they were using it to great effect.
Mm-hmm.
Mr. Smith and I kind of sat back, took a lot of notes, and at the end of the day, this was working very, very well for them because of the result that they were after, not because of all the other things associated with it.
Amazing.
So long story short is, as a result of increasing cash flow significantly, they came across the And Asset and Better Wealth, and thus came into the ecosystem. Cool. Well, we developed their model, and as a result of this, we were able to determine that at the end of the day, not only were they going to be able to save into a tool that would give them more leveraging ability, okay, so they could also continue to explore different ways in which to pay off their house or not pay off their house. But that was the tool that they were using to move the needle of their life in the direction that they wanted.
Did they want to pay off the house when they first met you?
Yes.
Interesting.
They did.
Okay.
They did. And
has that changed in the process of working with us, or is that still the goal?
I think that that's maybe at this point, and it's because the house is no longer something that's causing anxiety. It is a tool that is moving the needle of their life forward. So if we look at the home in this case as a financial tool, they are using that financial tool to achieve the results that are moving their life in the direction that they want. And I'm going to highlight this in that by increasing cash flow, being able to start a couple of And assets for themselves, and thereby have other pots of money that they can then go implement to do other things with. They're looking down the barrel of being able to become part owners of a business interest that they're very, very excited about.
That's cool. That's
Mr.
awesome.
Smith, most of all, because he really enjoys the thing that he does.
That's cool. That's awesome.
It's really neat, as a matter of fact. And so now the conversation is, what is the most optimal way in which to fund this business venture? And we're finding that because of their increase, how do I want to say this? Their diligence in starting with the end in mind, they have multiple ways in which they can fund this business venture, and all of them are relatively efficient.
Cool.
Which is a fantastic place to be.
That's awesome.
Yeah. Meanwhile, they love the life that they live. And for the most part, I mean, I think if we all wake up once in a while, we're like, it could be better. But for the most part, these folks really love the life that they live, and they're able to impact their family and their community in the ways that they're interested. At the end of the day, their model is moving towards being really strong, both in risk management as well as balance. And yet at the same time, a lot of this is still very dependent on cash flow. Right. And what's coming in. So not unlike so many other families, this is a situation where these folks are in their early to mid 40s, and they've come a long way. They've got a real clear vision for the future. And if there's one thing that I think is most powerful about where they're at, is that they have a very clear vision for the future, and they're making intentional decisions with their financial tools.
So I'm going to speak to the velocity banking people that are watching this. Love the outside of the box thinking, but I want to challenge you to ask you what the metric is. Is the metric to be debt free, or is the metric to create cash flow? Because what I love about this is we at Better Wealth have a tool that measures cash flow and directs it out into the future. And so one of the things that you could just go back to, if that is the standard, if you actually see where you're at, then you can see by paying off my mortgage, I'm freeing up this kind of cash flow. Awesome. Is it $1,000, $1,500, $2,500? Okay. But the option B is taking that same amount of money, instead of putting it towards a mortgage, could you create could it be productive and potentially create more cash flow? It's really that simple. By paying off debt, you are freeing up cash flow that hopefully can be saved. Like, there's no doubt about that. But there's activities that can, by doing, create more cash flow, more security, more options, more protection, and ultimately get you closer to unlocking intentional living.
One of the things that I think we try to do with money is we try to overcomplicate it.
Yep.
Money does two things. It either gets spent or it gets saved or controlled for the future. That's it. Money does nothing else. If you can come up with something, I got a guy I want to share with you. Okay. That being said, don't overcomplicate something that is already causing you consternation.
Yep.
That's really the thing that I think of with velocity banking, that in a potential risk management situation. Again, this is a case study of how a family is brilliantly using that tool in order to live a more intentional life and head down the ways that they want to go with their family. And at the same time, it has every opportunity to cause a potential issue. There's a layer of complexity that's now in place that maybe doesn't need to be there.
I mean, this family's saving 25% of their income. And that's happened because they've used velocity banking as a tool to free up cash flow, which is incredible. So hats off. Hopefully this is, again, gets you to think differently. And we want to be the company that in everything that we do, all the content that we make, in the way that we show up, the reason why we do coaching, the reason that we have independent models is we want people to figure out their money so that they can unlock intentional living. Because I don't feel like you can live intentional if you don't have ownership and if you don't take control of the money side of your life. And it's cool because how many times have people broke down in tears, or how many times have people totally made a different life decision after this, because there's something that happens when you get this thing figured out. And so, Jereme, thank you for another From the Frontlines. Thank you so much for watching, listening. I would love if this brought you any value to like this video if you're watching on YouTube, share, and we want to continue to get this message out. Thank you so much for listening to the Better Wealth Podcast. It would mean the world to me if you could hit subscribe, leave a review, and share this with the people that you know and love.